Welcome to Insights into Insurance with Tom Sorensen of Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
Saturday morning here on KATE, time for another episode of Insights into Insurance with Americana Insurance's Tom Sorensen. And Tom, good morning to you.
Well, good morning, Paul. How are you doing?
Hey, doing great. It's great to be back at it again this week. We've had a plethora of great shows so far.
Yes, I'm really excited to hear our listener email this week. Do you have it?
I just so happen that I do.
All right.
It's from Jerry. He says, "Hi, Tom. I know that your agency does a lot of crop insurance. I, as a farmer, am looking to get some marketing information regarding my grain. Does your agency, Americana Insurance, offer anything?"
Yeah. And was that from Jerry?
Yes,
Is that
Jerry.
what you said? Jerry. Okay, Jerry. Well, yes, we do offer something. Do I do it right in-house? No. Just as you probably have found out through these radio shows with Americana Insurance, we go out and partner with people that we know that are better at doing it than, let's just say, myself of grain marketing. I'm not a grain marketing expert. I'm a crop insurance expert. So Americana Insurance has a relationship with Diversified Crop Insurance Services, and that's a company that I represent for crop insurance, and we have a very sizable book with them. With that is an introduction for Jerry and other listeners is my guest today is Rich Morrison, and he is a Senior Risk Analyst at Diversified Services Marketing Group, which is a leg of Diversified Crop Insurance. So, Rich, are you there?
I sure am.
Well, good morning, Rich. How are you doing?
Good morning. Doing great.
That's good.
Thanks for having me.
You bet. Rich, just tell me a little bit about yourself.
Well, I grew up on a grain farm in east central Illinois. Went to school at the University of Illinois 20-some years ago. Went to work for a company called Consolidated Grain and Barge in the grain business and kind of cut my teeth there throughout various places in the Midwest. Spent some time with a processing company as a grain buyer as well. So I've been on that side of it for about 13 or 14 years. And then for the last 13 or 14 years, I've worked as a commodity broker and a licensed crop insurance agent. But in the most recent 7 or 8 years, I've spent a lot of time working as a risk analyst and trying to get information out to producers to help them market their grain. And we work with folks on crop insurance like yourself, Tom, and trying to help you provide producers with good information to not only get the right policy selected, but also help them on the marketing side of the business.
Right, and that's why some of my listeners might say, well, what's grain marketing got to do with crop insurance or any insurance? And that's the reason why I'm having you, is there's a good link between the crop insurance and the grain marketing side. And I'm sure you'll maybe say some of those things while we're talking here. But so as I'm going to start talking about grain marketing and that, well, you know, Jerry's got this question, and the $1 million question, I guess, is what should Jerry do for his grain marketing for corn and beans?
Well, we're in a period, as everybody's aware, of high supply. We've got very strong demand for our crops as well, so cheaper prices have certainly stimulated a lot of the demand, but we've got such large supplies both in the United States and at the world level right now that the markets just don't have to do a whole lot to get grain available to them. So I think, you know, we all recognized coming into 2017 it was probably going to be a tough year, barring any big supply disruptions, and at this point we just haven't seen them yet.
So what are the factors of the marketing, or I should say the prices right now? What do you see what could happen?
I think as far as dominating the markets right now, we've got a lot of investment money, and really this kind of started back with the beginning of ethanol maybe 10 years ago, but a lot of investment money has come into the commodity sector over the last 10 years, and at times that investment money comes in on the long side, at times it moves to the short side of the market. Right now, most of that's been on the short side of the market over the last few months, especially wheat and corn. These big funds have been trading them from the short side of the market just based on the oversupply, but even in the soybean market, they've gotten short here lately. So I view that as a potential positive. If you go into a growing season with traders short the market, if we give them some sort of a weather scare, they've got some potential buying power there. So I think that's a potential positive for these markets as we get into the growing season. But also the fundamentals are bearish. We've got big world stocks. The Brazilian crop continues to get bigger, not smaller. In the most recent USDA report, they raised their Brazilian crop estimates on soybeans and corn. So we're looking at record bean production in the southern hemisphere. So that's continuing to weigh on things as well.
Can I, just because I kind of want to make sure that all listeners understand what you're saying, what do you mean by short markets?
Well, they would basically sell, take a short position or go sell a contract of corn, soybeans, wheat, whatever the case is, and basically betting that the market's going to go down, which is a little different in commodities than what we're used to in the stock market. In stocks, typically people trade just as a long position. They buy a stock. But in commodities and other indexes, you can buy or sell it. So you can actually trade from the short side of the market if you're betting that the price will go down. And that's what the bet has been, I think, in the wheat market, corn market, certainly, that a lot of these big investment traders are betting that the prices are going to go down, not up. And so that's where their positions are sitting at the present time.
Yeah, so would you consider that like a hedging? So like if a farmer did that, would that be basically kind of like hedging, or what would you consider that?
Yeah, it would be basically the same side of the market as if a farmer forward sold or hedged his corn or soybeans ahead of time. He would also have a short position in the market. So, yeah, they're basically almost, I guess you could argue, trying to get ahead of the farmer, thinking that we're going to grow big crops and we're going to have a lot to sell, and so the funds have been selling ahead of time, figuring that eventually farmers will sell and push the price lower.
I know we just had a crop planting report or estimate. How did that turn out?
Well, that, I think, sets us up for an interesting spring. USDA was a little lower on their corn intended acres, right at 90 million this year. The trade is, I think, expecting maybe 91 plus million. So we're expecting about a 4 million acre drop in corn acres, expecting about a 6 million acre jump in soybeans, up to 89.5 million this spring is what the Planning Intentions report said. So we're, coming into spring with, to me, looking like a very negative situation for the soybean market if we do get that many acres planted. Corn, on the other hand, I think if we plant 4 million less acres, you're going to have a really good corn crop to keep stocks at or close to where they've been here the last year or so. So I think potentially corn's got more upside to it than soybeans based on those planted acres estimates.
Well, okay, that's some great information to know. We're going to take a quick break here, Rich, and so we'll be back here in about 30 seconds.
When your line starts singing and you're positive you've hooked into a big one, but sometimes everything stops. Suddenly, it's a sad story about the one that got away. Crops can be like that too. You put in all the work, but there's always a chance nature might try and take it away. At Americana, we help farmers find the best crop insurance options to protect against loss from hail, excess moisture, drought, wind, and fire. So put Americana in your tackle box. Americana Insurance. We're the A-Team. AmericanaInsurance.com.
We're back here on Insights into Insurance with Americana Insurance's Tom Sorensen. And Tom, we've been talking with Rich Morrison on the phone today. I'll let you get right back into it.
Yeah, Rich, I know that weather is going to be could be the biggest effect to the crop and grain market. I know NOAA, and you can talk about who they are, and that just released a new long-term forecast. How did that come out?
Well, on the third Thursday of every month, NOAA, which is the National Oceanic Administration, they put out their long-term forecasts. Thursday's number or maps that just came out really don't show a whole lot for this summer, but they are showing above normal temperatures still forecasted. That has not changed. They've been calling for a warm growing season now for 6 months or so. From a precipitation standpoint, they're actually showing around the Great Lakes area of the country, expecting to be below normal on precipitation. Most of the rest of the country expected to have equal chances of below precipitation this year. So not a whole lot here to trade on at this point in time, other than the warm forecast. And And, we made it through last year with a warm growing season, relatively unscathed, because I think we had above normal rainfall in a lot of areas. So we'll see what happens this year. If it is warm and a little bit dry, could maybe be a market factor at some point.
Yeah, I know that sometimes having an extra warmer summer is always a concern, especially us insurance agent, because that usually means humidity and storms. But so we'll have to see how that comes out. So how is some of the other world been doing as far as like the South American and in China and things like that?
Now, world production, it's been I've been saying through the winter months, it's been an unprecedented period, I think, where we've had so many countries have good growing seasons. Really, for the last 5 or 6 years now, you probably have to go back to 2012, the last time a major producing country had a crop problem. We had our drought in the United States. The former Soviet Union had a wheat problem in 2011, and since then it's been an unprecedented run. South America looking at record soybean production we mentioned earlier. China's crops have been very, very good. China is trying to incent its growers to plant more soybeans, less corn, so they don't have to import as many beans. So I think, longer term that could be a little bit positive to the corn market. But we've seen wheat production in the former Soviet Union, Australia, Europe. All countries have tremendous crops, and that just continues to build surpluses. So we're really, I think, kind of in a bit of a somber mood from the marketing standpoint until someone around the world has a supply issue. And as always, we hope it's someone else.
Yeah, that's the bad thing about grain market is sometimes our positives is someone else's negatives. But how is the southern states planting and crops doing so far this year?
They got off to a pretty good start. Texas is running about 8 or 9% ahead of normal on corn and sorghum planting. Cotton planting in the southern states off to a pretty good start. So the southern tier states are doing well. The middle tier states, as you get up into Kentucky, Tennessee, Arkansas, Missouri, they've gotten off to a slow start. They've been very wet. I see that the forecast here through the weekend is more water across that band of states. So it looks like they're going to continue to be a little bit behind on getting the crop in the ground. And then as you slide north, maybe things are improving a little bit. So been kind of hit and miss as far as planting progress at this point.
Yeah, actually in our area, and again, you've been in Florida, but down in our area right here we've had little or nothing planted in the ground right now, and so we've been wet, cold. So that's not typical of the rest of the northern area. Is that what you're saying?
Well, it seems like it's kind of hit and miss. I'm from Illinois, and they're planting there, but then you get 100 miles north and they're wet again. So it just depends who's been getting the rain and who hasn't, I guess, so far this spring.
So give me some strategies. Anything?
Yeah, I've been a big proponent of selling beans throughout the winter. That market, I still think, has some big downside risk. I think that's a good word that we like to use. We're risk managers. We don't want to speculate as much as we want to try to manage risk, and sometimes managing risk means you take risk. But I think in the bean market, there's just too much risk, price risk, to stay completely long. And I think up here, this $10 plus prices that we had this winter certainly were worth rewarding, and hopefully a lot of producers got a lot of those beans hedged at those levels. Corn, on the other hand, with a lot less acres getting planted this year, I could certainly make a case for the corn market seeing some sort of a weather rally. We've had it each of the last 2 years. Corn has rallied in the June-July period, and whether or not we took advantage of it enough, that remains, an individual situation. But I'm fairly confident that we'll get some sort of a scare at some point, especially with these investment funds all short the corn market. So I'm thinking on beans, be aggressive hedging early. On corn, I'm being willing to be patient and waiting for some sort of a weather rally at some point in time.
Well, that's some good information. Okay, we only got about 25 seconds left. How do farmers get your info?
Well, they can talk to you, Tom. You can set them up. We have a Grain Market Outlook email letter that we send out each evening. I do a 10 a.m. market call every day. It's about a 2-minute long phone blast with an update on the markets each day. We do a monthly webinar called the Third Thursday Marketing Meeting. So a lot of different ways that we've got to get market information out to the folks that we work with.
That's right, and they can contact me at insights@americanainsurance.com or give me a call at 507-377-2000. Well, Rich, I appreciate your time and taking the time out of your vacation to discuss these markets.
My pleasure. Thank you.
Yeah, hopefully we have some positive things happen in 2017 here.
It's been Insights to Insurance here on KATE with Americana Insurance's Tom Sorensen. We'll be back next week.
You've been listening to Insights into Insurance from Americana Insurance Group. All information provided is intended to be educational in nature. Before acting upon any information obtained during the Insights into Insurance radio show broadcast, consult an appropriately licensed professional.